Hello, welcome to the channel. Today we've got something a bit different. We're not looking at Palantir, we're not looking at Chargepoint, we're looking at a brand new one. We've not spoke about it on the channel before. It was recommended by one of the team in the comments down below, so I appreciate all your suggestions. You're keeping me busy. There's so many suggestions that I've got to do my research on. But this one was recommended a couple of days ago. I'd heard a bit about it as well. It's sort of gaining a bit of momentum, a bit of popularity, so I thought I'd cover it in this video. So we're not going to be talking about the details around the merger itself, but we're actually going to look into the company in more detail. So we're going to have a look at what they do, what services they offer, what sort of revenue they've been seeing the last year or so, and what they're forecasting to achieve moving forward. Because that's a big thing. When you've got a company becoming public and you want to invest in them, you want to know what they're forecasting, what potential market they've got, and how can the company grow. Get some figures up on the screen, have a look, see if they're achievable. And whether it's a company, because it's only around $13 at the moment, whether it's a company that once it merged can just take off and go. Do you know what I mean? We've seen a load of companies get on that hype train and push on, but whether it can sustain that, there's a few of my favourites out there. Palantir is one of them. I think it will sustain it. So this could be one as well. So we'll take a look. So I've got the laptop in front of me, so we'll go through some of the figures together. So firstly, a bit about the company. So the company is called AvePoint. So AvePoint, they're the largest data management solution provider for Microsoft cloud system. And it announced on Monday, the 23rd of November, that it'll be merging with Apxt Technology Acquisition Corporation, or Apxt on the NASDAQ, in a merger reported to be around $2 billion. So AvePoint at the moment provide the largest software as a service user base in Microsoft 365. And they reported at the end of September, they have around 7 million users at the moment and an estimated addressable market of around $33 billion by 2022. So a lot of the company's revenue at the moment are through direct sales with mid to large enterprises and mid to large capped companies. And what they're trying to do as part of this merger is potentially release some of these funds that they can go after some of the smaller businesses and smaller customers instead of the mid to large that they're currently achieving. So we did mention Microsoft earlier, and that's because AvePoint are heavily involved within Microsoft. So they actually collaborate with some of their technology, such as the Microsoft Teams management, which again is massively popular at the moment as more and more people are having to remote work, especially where I am. I'm currently remote working as well, and we use Microsoft Teams. And I can't see this changing anytime soon. Even after the pandemic's finished, there'll still be quite a high level of remote working. And yeah, so there's good business out there. Part of their senior leadership team have actually got the former Oracle CFO, Jeff Epstein. It's a different one, all right? He's not back, he's a different guy. And the former Goldman Sachs head of technology investment banking, Brad Koenig. And these two combined have been involved in over 100 IPOs and managed different companies, including Microsoft and Oracle. So two big companies there, and they've both been involved. And it's been announced that both of these will be part of the board of directors at AvePoint moving forward. So you've got a lot of experience there with dealing with IPOs and dealing with successful companies as well. So it looks good in terms of a senior leadership team. So let's get into the good stuff. The stuff that I like is seeing some figures. Let's see some numbers on the screen. So we're going to go through what revenue they've currently been seeing and what they're forecasting to project moving forward. And that way we can give a slight indication of whether this is a company that we believe has that growth in it moving forward. And hopefully then it could be reflected in the share price. So let's take a look. So one of the key statements here, which I like the look of, is over 200 public cloud companies. So out of 200 public cloud companies, AvePoint is only one of 5 with 2020 estimated revenue in the 150 million range. 2020 estimated year-on-year growth is above 25%, which is fantastic. And EBIT margin is over 10% as well. So there's some good figures here being announced. They've got good revenue coming in, estimated revenue for 2020. And obviously their 25% year-on-year growth is a great figure. And they believe that their total addressable market moving forward will grow quite massively, and we'll touch on that now. So at the moment, their 7 million customers that they have is around 3% of Microsoft's 250 million 365 users. So AvePoint actually believe that they can increase this 3% to 10% of Microsoft's customers at the moment. And that's including Microsoft growing, and they're estimated to get around 500 million users in the future. Now, it doesn't say a date in which Microsoft are expecting that. So if Microsoft can grow in the future to 500 million users, AvePoint believe they can capture at least 10% of those customers. So 50 million users in the future for AvePoint. So moving into next year in terms of revenue, so obviously this year they're expecting around 148 to 150 million in estimated revenue for 2020. 2021, they're projecting around $193 million in revenue, and they're forecasting for 2022 around 257 million. So what we have at the moment, AvePoint is a very solid company with good ties to Microsoft, obviously in their cloud system. 7 million users at the moment is a very good amount. They're hoping to increase that, but again, doesn't give a time frame, so it's very difficult to put a time scale on it and sort of judge how it's going to play out moving forward. But that tie with Microsoft increasing their users, and on the back of that, AvePoint increasing theirs, it does show some growth moving forward. So over 25% year-on-year growth from last year to this year, and obviously that's set to continue with the figures that they're forecasting for 2021 and 2022. So that's good, it's moving in the right direction, some solid figures there. And if they do get anywhere near those 50 million users or 50 million customers in the future, that's a huge amount. That's a huge amount, and that should then reflect in the share price. So this has got a lot of potential, this one, a lot of potential. They seem to be in a good solid position at the moment with future growth forecasted, but again, just need to achieve that, but it's a really good foundation. It's a really good base for this company. So they've had 8 consecutive quarters of positive growth. What you would say is probably the last 2 or 3, or probably 3 or 4 now, ever since the pandemic took place, that was going to potentially grow with more and more people working remotely. But even when we do start to return, people will now start working remotely, even if it's part-time. So I can see this use staying and actually growing. So I think it's here to stay now, this remote working, now that we've implemented it over the last year because of the pandemic. And for many people, it has worked. So yeah, you would expect their earnings to be positive purely because of the service they provide and the situation a lot of people and a lot of workers find themselves in. But yeah, it got some good growth potential here. So now we'll look at the share price. So as of today, outside of hours, it's a bank holiday in America, Thanksgiving, I think. So have a good one if you're doing that. So outside of hours, it's currently trading at $13.20, which is over 20% up actually. It's 20% up in a day outside of hours. So I see more and more people learning about this. Obviously, this was suggested to me in the comments. I'd read a bit about it. So there will be hype with this. So I think you can see this going up regardless of the fundamentals because it's linked with Microsoft and the fact that more and more people are finding out about it. So that's why we're trying to look at the actual figures, their revenue, what they've achieved, what they're forecasting to achieve. So we don't want to invest based on hype. We want to invest based on figures and where we can see the company going. So it's up 20%, $13.20. This will probably go up more here. So what we need to do, we'll do some further videos on this company because I do like what I see here. But the fact is, it's starting to jump already. Now, we only want to invest in this company if we see it moving in the right direction moving forward. I do like this company a lot. They seem to have quite an experienced senior leadership team that they've been brought in. The cloud service area that they're in, I don't think will go away. And if anything, it will increase as more and more people get used to working from home and it's successful working from home. So I can see them having a growth in terms of their future market. They've then backed this up with their forecast on year-on-year revenue growth. So yeah, on initial thoughts, I quite like this company. Now, what I'll need to do is read up more about the actual merger itself. So I wanted to focus on the company and the figures and the numbers behind the actual company first. Before I then start looking into the merger type thing. So we'll probably do another video on the actual merger and get some more information on that and pull it all together for you guys. But yeah, $13.20 at the moment. I can see this going up on Friday. Obviously it's up 20% outside of hours on Thursday. I can see this going up, and probably in the next few weeks as more and more hype gets built. A lot of these SPAC stocks, they get a few YouTube videos on them and then they just shoot up. So yeah, I do like the company long term. It should be a good play. We'll do some more research though before I invest. So let me know in the comments down below what you think of the company, if you're investing in them and what your thoughts are on the future. As always, thanks for watching. Subscribe if you're new and stay safe.